NIO, Maxer, Upwork, and so much more approaching $35,000 in unrealized gains. I sold them all to go all in on NIO calls.
Could you imagine if that were true?
This is episode 6 of the Portfolio series where I cover recent news, even talking about other stocks like Magnite in today's episodes, and I'll perform some occasional, albeit mediocre, technical analysis on my growth portfolio. We started at just $30,000, but then we added some money, we got a lot more gains, and now we're at over $90,000. Let's do it. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we are talking all things growth stocks and my growth portfolio. All of these stocks are what I deem to be high growth stocks. Gold means we've seen over 100% gains on them, green is a stock with new or exciting news, and purple is for big upcoming or recent catalysts for that stock. And really quickly before we get into this, if you appreciate the transparency in me consistently showing you my entire growth portfolio, go ahead and absolutely destroy that like button to help out the channel. I genuinely hope these episodes bring valuable information to you. Additionally, on January 3rd, the Patreon will open back up to new members. There you'll get my buy-sell alerts in real time. You'll get a stream of secret videos made just for top tier patrons. We're also doing a 2% per week passive income option strategy account with $10,000 that we've already grown to over $11,800. And of course, I'm going to be in the chats doing one-on-one conversations with all of those patrons in there. Finally, I am holding this box because in January, I will be hosting a little giveaway. I'm going to be giving away the box that the Tesla short shorts came in. I got to keep the shorts for the studio, but inside here, I'll put a little gift, maybe a gift card or a handwritten note, maybe something even crazier, who knows? But in January, I will select one top tier patron to win this box. So if you're interested in any of the benefits that we just listed here, or if you want to enter this giveaway, go ahead and check out the link below. Again, it opens back up on January 3rd. And know that $420.69 price tag is not real, it's just a placeholder. All right, back to business. Our first stock is NIO, ticker NIO. We're up over 288% on this position. They'll be holding their 4th annual NIO Day on January 9th, 2021, where they're expected to launch their first sedan model. It'll also include a lot of battery updates, such as their next-gen battery swapping station, which will involve lower construction costs and contain even more batteries. And we can't forget about the Apple car rumors. Analyst Dan Ives says he puts the chances of Apple doing a strategic partnership with an auto manufacturer at over 70%, and I completely agree with this. I think it would make way more sense for Apple to partner with a manufacturer than try and go make their own cars on their own. I mean, could you just imagine the branding power of an Apple x Tesla car? It would be insane. However, I personally do not think that NIO is going to be the manufacturer they end up partnering with. I found this rumor article saying Apple Project Titan staff spotted at NIO, but this was actually back in April of 2019, and I just see it as an entertaining speculation article. When you consider the US-China tensions, things like Apple versus Huawei, and what NIO is capable of doing on their own anyways. In addition to the other very eligible candidates like Tesla and Volkswagen, to me, this NIO-Apple storyline is one to follow, but not one to make investments based on, in my opinion. Now we move to technicals. Looking at NIO's chart, I would like to see some more consolidation. In the past, it liked to make this triangle formation and then kind of break out. You can see all these little triangles, but it was kind of empty underneath. There wasn't too much range. Here, we're seeing a lot more price action, a lot more range, which I think is really good. Actually, on December 14th, right here, I mentioned in the Discord to top tier patrons, NIO is looking kind of attractive again, maybe a little interesting. That would have been about a 15% gain by now, but I think this $38 to $40 range is where we should really be paying attention. Our next stock is Upwork, ticker UPWK, another one of our double baggers. Honestly, since their Q3 earnings, not much news has come out. As a reminder, in their Q3 report, Upwork beat solidly on both top-line revenue and bottom-line non-GAAP earnings, which is partly why it rocketed higher after that report. If we take a look at insider activity, we do see that in the past 3 months, there has been net selling of the stock from insiders, including the CEO. You can see here that Hayden Brown, the CEO of Upwork, sold 29,592 shares at about $39 a pop, cashing out with $1.2 million. But here are two reasons why I don't think it's worth freaking out right now. First, she actually bought 58,255 shares by executing some stock options that was the same day she sold. So she probably bought the stock at a really cheap price because of her stock options, then sold half of it in the same day for a quick holiday payday. And the second reason why you should not worry right now about this sale is that, as Peter Lynch says, insiders can sell a stock for any number of reasons, but they buy them for only one. They think the price will rise. And net, she actually bought and held over 28,000 shares that day, and she's still holding over 437,000 shares, which is worth more than $14 million. So in my opinion, the CEO, Hayden Brown, she has more than enough skin in the game. Up next is a new stock in the 100% Gains Club, the Trade Desk, ticker TTD. The Trade Desk is largely a play on connected TV, or CTV, and streaming wars. And finally, after 6 episodes of the Portfolio series, we have some interesting news to share on the Trade Desk. Fubo and Magnite are 2 CTV plays that have absolutely boomed over the past 2 months. And one of the biggest CTV plays, Roku, is finally getting the attention I think it deserves as well, rising over 35% since my last Portfolio video. But today, I actually wanted to focus on Magnite because I think Magnite and TTD are connected in a way. Alright, hear me out. On November 16th, an article comes out saying that Magnite hops on board the Unified ID 2.0 train. And check out what happens on November 16th to Magnite stock. It goes on a 190% run to the flippin' moon. So if I'm researching Magnite, this would make me ask, what the heck is Unified ID 2.0? It's an open source ID spearheaded by none other than the Trade Desk.
Now we're cooking with gas.
UID 2.0 aims to use encrypted and hashed email addresses to create a standard identity replacement for third-party cookies, and that sounds super confusing. But the point is, the Trade Desk is striking deals with a bunch of partners in their space, like LiveRamp, Criteo, and Nielsen, and now Magnite, and they're creating an industry-wide collaboration which is going to be huge. If you're long TTD or Magnite, I highly suggest you look into this. All right. One of my favorite stocks is up next. We have Celsius Holdings, ticker CELH. And the exciting news is that we are quickly approaching 100% gains for us here in this account. And I know some of you have already doubled your money if you bought when I released this video talking about Celsius for the first time. We recently hit new 52-week highs, and in doing so, Celsius surpassed the highest price target on Wall Street for the stock, a $40 rating given by Maxim after their previous Q3 report. Other than the price action, the newswire on Celsius has remained relatively quiet while the price of the stock keeps running higher. So as investors, what does this mean for us? I want to be clear that long term I'm still very bullish on Celsius stock. However, let's talk a bit about the short term. Obviously, I never want to get caught up in short term price action and predictions because at the end of the day, we don't try and time the market here. But I think it is trading a bit expensive right now. And here's the thing. There is still an aluminum can shortage right now, which is inhibiting the inventory of some drink producers. Celsius has said they're using their global connections to get through it just fine, and I have been going to stores and checking the Celsius shelves for myself, and they've looked pretty good. But because they are trading so high right now, if Celsius does miss their numbers on their next Q4 report, whether it's from the can shortage or from something else, things could get kind of ugly in the short term. Just keep that in mind if you're thinking of buying or starting a position now. I'm not saying you shouldn't, I'm just saying it depends on your risk tolerance. Now, to my rather untrained eye, it does kind of look a bit overextended, approaching overbought territory on the RSI, and volume not really picking up in any major way. I'm going to be watching for some consolidation because it does like to consolidate, then break higher, consolidate, and then break higher, consolidate, break higher. So if we see some consolidation here, then, I'll have some more faith in the price action. And with the amount of momentum this stock has right now, I'm not sure I'd want to fight it, let alone bet against it. So one last time, congrats to all of you who have already doubled your money with this beautiful stock. Next, we've got Maxar Technologies, ticker MAXR, and this one has had and will have many catalysts to come. Most recently, SiriusXM's new satellite, which was built by Maxar and launched aboard the SpaceX Falcon 9. It's working well and perfectly out in outer space. Not only is this a completed project for Maxar, but a validation of their work and an opportunity to get more institutional eyes on this stock. The space industry is continuing to get more attention with SpaceX and Virgin Galactic, just as we were hoping and expecting, and every day as we move into 2021 now, we get closer to launching Worldview Legion, which is currently expected to launch this September. And as I've previously discussed many times, I think that this new constellation of Worldview Legion satellites is going to be an absolute game changer for Maxar, unlocking a multitude of different use cases and bringing in revenues that cannot go unnoticed on Wall Street. The mantra with this stock has always seemed to be stick to the plan, they're executing well, and just hold on for the ride. Stock number 6 just had a massive run up and a huge news event for the stock, and that would be Crowdstrike, ticker CRWD. Just recently, there was an attack made by Russia-linked hackers on SolarWinds Orion software, which is widely used by major companies and US government agencies. Crowdstrike was also targeted by the very same group, but while SolarWinds was compromised, Crowdstrike was able to thwart the attack, and the hackers were unsuccessful at attacking Crowdstrike. After SolarWinds was compromised, they deployed Crowdstrike's endpoint security to secure the company's internal systems following the attack. This event put a ton of eyes on the stock after its successful defense, and articles like this started coming out. Thus, the stock is up a nice 27% since the news of the hack was made public. Now, obviously the news of this hack was very unfortunate, but as a Crowdstrike shareholder, not only am I happy that the company has proved themselves and their product yet again, and it served as a great catalyst for the stock, but this just further increases my conviction that cybersecurity is where I want to have my money invested. Next, we have Square, ticker SQ. Now, when it comes to Square, one of the most common things I hear talked about today is the fact that they're invested in Bitcoin. By the way, if you ever see a comment like this, it's not actually me. I'll never refer to a series of numbers or phone number, and I'll never refer to WhatsApp. Unfortunately, there are scammers out there in the world. Anyways, Bitcoin has been on a tear lately, rising over 120% since October. And in October, Square bought about $50 million worth of Bitcoin, and now the Bitcoin on their balance sheet is worth over $110 million. And you might think that, maybe Bitcoin's price should kind of correlate to Square's stock price. I do like the way you're thinking, but with over $2 billion in cash on hand on their balance sheet, and with a market cap of over $100 billion, doubling their $50 million investment to $100 million sounds like a lot, but it doesn't really move the needle for the stock. However, if you make an investment thesis along the lines of Square understands Bitcoin the best amongst most of the fintech players, and they probably have the biggest plans set in place for Bitcoin in the future, and you're investing based on that, I could see that as being valid. Honestly, I think Bitcoin, although it might be a stretch, could be a reason or part of a reason to invest in Square, but I wouldn't say it's because of the actual Bitcoin they're holding, if that makes any sense. In other news, Square might diversify their business with a potential deal with Jay-Z for his music streaming service, Tidal. Now this begs the question, where the heck is Jack Dorsey taking Square? People think he has ambitions of building Square into a collection of businesses under one corporate umbrella. This is definitely something to think about. Maybe one day Square won't just be a fintech company, maybe one day they'll create an ecosystem that includes e-commerce, music, streaming, and within that ecosystem they create a payment platform that runs on Bitcoin. Just throwing that out there. Moving on to one of our favorite spec plays, Virgin Galactic, ticker SPCE. In very exciting recent news, they just had another piloted test flight, but they unexpectedly aborted the mission after the ignition sequence for the rocket motor did not complete. While this might not sound exciting or too great for the company, it did demonstrate successful safety measures for the program. In fact, as an investor, I feel even more confident in their ships because yes, it didn't make it to space, but it landed the crew safely with the ship in great condition. So I actually drew this support line right here a while ago, and it seems like Virgin Galactic has actually bounced off of that support line that I drew, or right around there. And if we can establish a new trading range above this line, that would be absolutely awesome. And I think this would kind of signal to investors that, Wall Street might be taking them more seriously as they get closer and closer to their first commercial flight, and they prove that their ships are working well. Our ninth largest gainer here is Callaway Golf, ticker ELY. A couple quick pieces of information here. November 25th, the FTC granted antitrust clearance for Callaway to acquire the remaining part of Topgolf that it doesn't already own. Because remember, Callaway has actually been partial owners of Topgolf for a while now. Second, Compass Point downgrades Eli, calling the shares pricey. The good news is that they went from a buy rating to neutral, not from a buy to a sell or from a neutral to a sell. Personally, I try not to put too much weight on analyst price targets, but sometimes they do move the price of a stock. I think half the time they'll kind of have their own agenda, these analysts, or the other half of the time they're just chasing the stock price around in circles. I'm still long-term bullish for the next 3 to 5 years for Callaway Golf. Taking a look at a weekly chart where each candle represents 1 week, if we go back to 2018, we can see that this was their previous high, and now guess where we are right now. So we're approaching a multi-year resistance. And if we zoom in and we go to a daily chart on a smaller time frame, we can see that it is behaving around this resistance, kind of struggling to get past it. And personally, I would not mind if we consolidated a bit more here, traded in this highlighted range, and took a breather after this big rally before we try and break through this multi-year resistance. And if we can get through that, I think that's really positive for the stock price. And as a reminder, I think it's so much fun to draw up these charts, and they do help find good entries, but as a long-term investor, I try and remind myself not to get too caught up in the short-term price action. Okay, this next stock, I might actually move out of this account, and that stock is C Limited, ticker SE. I might move SC out of the growth account into a private account. I'm not going to sell it because I still love the company, but I might replace it with my new stock, a new stock that I am hopefully going to be buying very soon. Make sure you subscribe so you see that video. There's no fundamental reason for me to sell SE, which is why I'm not selling it, I'm just moving it. But obviously I didn't get to build out my full position. It's one of my smallest positions, and I just want to bring in a new stock that I can really build out for this account to kind of showcase to you guys. Additionally, having more than 12 or 13 stocks is just realistically too much for me to keep track of in an effective way. I mean, this video alone took over 12 hours of research just to catch up on recent news, so that could kind of tell you what I'm saying. Alright, this next stock is actually our largest holding in the entire portfolio, and it is under threat by a tech giant, almost like a negative catalyst. Or so you'd think. The stock is Teladoc Health, ticker TDOC. That's right, Amazon came out with news that they had big plans to expand into virtual care and telehealth, and we all know how ruthless Amazon can be as a competitor. But Amazon says these are simply rumors and that they are not willing to comment on the matter, other than saying Amazon Care is a healthcare benefit pilot. And it actually doesn't look like Amazon is targeting telehealth or Teladoc directly, just that they'd be offering some healthcare benefits, which would naturally include virtual care, which lands in TDOC territory. And 2 quick comments about this. First, I think the competition from Amazon actually validates the space that Teladoc is in. If Amazon is willing to expand into this sector and spend a ton of money on R&D, then that means there has to be money to be made here, and Teladoc is in the right place. Second, Amazon is not some undefeatable business. You know one company that actually beat Amazon when Bezos was trying to run them out of business? I'll give you a hint. I'm actually invested in them, and you might be too. We just talked about them. Square. So who's to say Teladoc can't do it too? You know, it's true, Teladoc has been struggling on the charts for a bit, but I think patience will be rewarded here. And meanwhile, ARK is buying up the stock incredibly frequently over the past couple of weeks, so obviously they see some good value at these prices. Next up is what I like to call the savings account. That's Pershing Square Tontine Holdings. This is Bill Ackman's SPAC. They are yet to find an acquisition target, and there's actually not too much super exciting news. I'm not sure why I highlighted it green. Yeah.
Get clickbaited.
I'm really just keeping a small position here with some extra cash that I don't need at the moment. And if it goes up and it finds the acquisition target, that's great. But if we get deeper into Q1, the first part of 2021, and there's still no sight of an acquisition target, then I might start to slowly sell out of my position because I don't want to be holding the bag if it comes to their deadline and they don't have anyone to acquire. Keeping my ear to the ground for now. And before we get into the final stock for today, check out the quote of the day. You might find some wisdom there. That's right, This channel has some bangers coming up. We're talking about my outlook for the 2021 to 2022 stock market. I'll give you a little hint. It's different from most YouTubers. We're also going to have a brand new stock pick coming very soon. We're going to talk about my thoughts on Palantir. No, it's not my stock pick.
But I did initiate a small position, which I might sell out of. I don't know yet.
And I'm also making a video about the lessons I've learned so far through my 2.5 years of investing. So make sure to subscribe if you haven't already. And of course, remember January 3rd, baby, Patreon opens back up for the giveaway. But let's get into our last stock for today. And that would be good old Facebook, ticker FB. So Facebook has turned out to be the worst performer of the bunch despite being a stock that I've held since I started this account on June 16th. Obviously, we have the FTC and some states suing Facebook over antitrust and monopoly related issues. Now, it looks like this case might drag on for several years and hang over Facebook for a while, but let's talk about some potential scenarios and outcomes. Some members of the Discord brought up the fact that if Facebook is forced to divest or sell Instagram and WhatsApp, what if those two companies did some sort of spin-off and went public? As a Facebook shareholder, hopefully we'd get some Instagram and WhatsApp shares, and with today's market, those things could bag us some really nice gains. But again, I think this hypothetical scenario, even if it does play out, is definitely a few years down the road. Facebook even offered to help build a rival social network to fight this lawsuit. If it wasn't for the political and legal overhangs on Facebook kind of dragging it down, I would consider this stock pretty cheap compared to its peers. But the market has made its point clear. It doesn't seem like it's ready to move the stock higher until we get some more clarity on this case. I'm probably going to be holding my position right now, seeing as we're not up that much, and if it drops much further below my cost basis, I'll probably be adding. The stock actually recently broke a pretty important trend line that has been intact for the past few months, dating all the way back to February. And it was creating this triangle here, and triangles can either break out to the upside or the downside, and this is really not a great sign. So again, I'll be looking for it to reach my cost basis one more time. Looks like I drew a support line right around here at about 260, 261. So I think I'm going to keep my eye on this area right here. I think this is a classic case with Facebook stock where it's another, do I buy the dip knowing that this will probably blow over like the rest of the antitrust drama? Or maybe this time is different? Or maybe I hold on for the Instagram spinoff so I can get a quick 10 bagger. That's a question only you can answer. If you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check out our quote of the day. You might just learn something. Make sure to follow my Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. Follow the one with the period, not the one with the underscore at the end, because that one is a scam. If you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.